Hello, my name is Rachel and welcome back to my channel. So today I'm going to talk you through how I aim to beat the market by investing in funds and not by buying individual shares. So this is a really simple way of doing this. Rather than having to select all your own different stocks and shares, I'm looking at funds that have beaten the market over the last 5 years in comparison to, say, something like an S&P 500 index tracker, which can be excellent. However, there are funds out there that can perform better. Often there's a lot of articles in the news that say that actively managed funds are very expensive and that they also rarely outperform the market. So I think it's around 80 to 90% of actively managed funds do not outperform the market over 15 years. However, that means that there are some funds that are still doing very, very well and are able to outperform the market. And I'm going to talk to you today about one fund in particular that I've been invested in for the last couple of years that has outperformed the market for the last 5 years and personally did very, very well for me in the last year. So in the last year, this fund went up 120%. Which is huge gains. Now, I understand that the last year has been very volatile in terms of investing, and this isn't representative really of what I expect to happen in the future. So I'm also going to be talking through their numbers from the years previous to that, just so you can see that they have still managed to outperform the S&P 500. Now, what a lot of people will say is actively managed funds are very expensive. Yes, they can be more expensive, and this one that I'm talking about is more expensive. However, when you take into consideration the percentage returns are much higher than the S&P 500 over the last 5 years, the extra percentage of cost doesn't really matter to me personally. So this fund that I'm going to talk you through is the Baillie Gifford American Fund, and their fees are 0.51%. Then you can buy it on a regular platform where the fees might be something around 0.2%. So if we're to compare that to the S&P 500, where you might buy, for example, Vanguard's VUSA or VUSA fund, you could buy that on Vanguard's platform where the platform fees would be 0.15%, and then the cost for that fund specifically would be 0.07%. So for Vanguard, for example, you're talking about fees of 0.22% to buy into the S&P 500, and to buy into Baillie Gifford American B accumulation fund, you're talking about, including platform fees and ongoing charges, you're looking at 0.71%. So not really the huge amount in difference in fees that you would expect. And the return on investment is much higher for Baillie Gifford American B accumulation fund in comparison to S&P 500 index tracker, for example, Vanguard's VUSA index tracker. So I'm going to run you through some information that is very widely available. So this can be found in their key facts report on the Baillie Gifford website, but just to give you a really good indication of the difference in income that you could be getting if you were to invest in something like Baillie Gifford American B accumulation fund versus just investing in the S&P 500, which is often a very popular choice. Now, just to say these results are historic and are in no way indicative of the future performance. I'm also not a financial advisor. I'm just really interested in investing and have had a really good experience over the last couple of years with investing and wanted to just share this information with you in case you found it interesting. I do definitely appreciate that investing in the S&P 500 is a really good, solid, secure, well-diversified way of investing. So I'm by no means saying that you shouldn't do that. I think it's a brilliant thing to do, but I'm just saying that there are other options, and some of those options can be more advantageous in terms of bringing you in more money, if that's something you're interested in. So I'm going to run you through some key facts just so you've got an idea of what I'm talking about and what kind of got me tempted into buying in this fund in the last couple of years. So as I said, their 2020 returns were 121.8%. versus the benchmark of the S&P 500, which was 14.7% in 2020. So very, very different returns there. Obviously, that was a bit of an outlier. That was a different kind of year. This fund's aim in total is to exceed the S&P 500 by 1.5%. So that is their mission. I'll just read that out to you to make sure that I'm giving you an accurate representation. So it says the fund aims to outperform after deduction of costs the S&P 500 index as stated in sterling by at least 1.5% per annum over a rolling 5-year period. And we can see from this that they have absolutely done that. There has only been 1 year in the last 5 years where they haven't outperformed the S&P 500. So last year, so 2019, they did 26.9% versus 26.4%, so quite close to the S&P 500, but just that little bit more. And then in 2017, they achieved 23.6% in returns, whereas the S&P 500 only achieved 11.3%. Then in 2016, it was 27.3%, and the S&P 500 was 33.5%. So that was a year where the S&P 500 did perform better. Then in 2015, it performed 13.5%, and the S&P 500 performed at 7.3%. So just to give you an idea of how that breaks down in a periodic performance analysis. So basically, over 5 years, Baillie Gifford American B Accumulation Fund has achieved 42.4% per annum growth. Whereas the S&P 500 has achieved 16.9% over those 5 years, so that's annualized. And the target for Baillie Gifford American B Accumulation Fund is 18.4%, and they've actually achieved 42.4%. So they've got that target of achieving over 1.5% over the S&P 500, but they've massively overachieved that. Now, obviously, the last year has been a very, very different kind of year, but I still believe that they can continue to do very, very well. They have done very, very well historically and do tend to outperform the S&P 500. So some really important things to consider with investing in Baillie Gifford American B Accumulation Fund versus the S&P 500. The S&P 500 is obviously much more diverse, so they are the 500 top companies in America that you've basically got a little slice of if you're investing in the S&P 500. Whereas with Baillie Gifford American B Accumulation Fund, they tend to hold between 30 and 50 stocks. So you're much, much less diversified than you would be in the S&P 500. So for that reason, it probably is a little bit riskier. So in terms of risk score, investing in Baillie Gifford American B Accumulation Fund would be much riskier than investing in the S&P 500. So the risk score for this fund is 6, and that is all the way down from 1, which would be typically lower rewards and lower risk, all the way up to 7, which would be the highest level of hopefully rewards, but also that high level of risk. And this is a 6. So this is a much more risky fund to be investing in, rather than that big diversity that you're going to get in the S&P 500. So it's just kind of whether you're willing to take that risk, because it is obviously a risk. And then there's also those fees to consider as well, which are obviously higher, again, for Baillie Gifford American B Accumulation Fund. However, I personally am comfortable investing in this fund because I believe that they will continue to do well. They are outperforming the S&P 500. I have had some really, really great returns from them in the last year. To give you an idea of the top holdings that they currently have, just so you get a feel of the kind of things that the fund is holding, it does tend to be, I think, predominantly tech. So yeah, information technology is 32.7% of the makeup of this fund. So its first holding is Shopify, then Trade Desk, Amazon, Wayfair, Roku, Tesla, Twilio, Netflix, Zoom Communications, and Moderna are those top 10 holdings. I will continue to invest in Baillie Gifford American B Accumulation Fund. I hope that they continue to do well. I'm absolutely not expecting them to return that 120% that they did last year this year, but I still want to remain invested in them. And I would personally prefer to be invested in Baillie Gifford American B Accumulation Fund as opposed to the S&P 500 index. at the moment. So this is just my approach. I do appreciate that it probably is quite different to some people's approaches. Everyone likes to do things differently, and that is the beauty of life, I guess. Everyone is very different, but at the moment this is what I'm choosing to do. And yeah, if anyone's interested, the platform that I have Bailey Gifford American Beat Accumulation Fund in is Barclays at the moment, and then I'm looking to get my investment ISA potentially with Fidelity next year. But yeah, this fund is not available on Trading 212, which I use to buy lots of individual stocks and shares. I think they're awesome. If you did want to buy into the S&P 500, that is available on Trading 212, and I believe also on Free Trade. So if you bought that under Vanguard, you would buy that under VUSA. So that is available, but I specifically choose to go with a platform where Bailey Gifford American Beat Accumulation Fund is available to me. So at the moment that is Barclays, but I am looking at different options for next financial year. So I do hope you found this video interesting. This is basically just me trying to say there are easy ways to outperform the market. I think that as a quite new investor, I absolutely do not believe that I could outperform the market picking different stocks and shares. I find it very fun and very interesting, but I don't believe that that's something that I can achieve. But I do believe that that's something that potentially Bailey Gifford can achieve on my behalf with my money. So I'm happy to send that over to them to actively manage that money and hopefully make more for me. I hope you found this video interesting. Any questions, just let me know in the comments down below, and I will get back to you as soon as I can. Have a lovely day now, and thank you so much for watching. Bye bye.